Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is February 18th, 2021. Let's go through our topics of the day, what we're paying attention to at Blanke Schein Wealth Management. Therefore, you should be too. So thanks for watching. For our topics today, we're going to talk about global reflation. We're also going to talk about Top Gun. Yes, the movie Top Gun. I think it's 30 years in the making for Top Gun 2 with Tom Cruise. That's due out this summer, and that's going to be really exciting. And I'll bring this all back to together in just a minute with where I'm going with the Top Gun theme here. And then finally, the S&P 500. Its sort of streak right now has been lackluster at best, but let's just, it's okay to take a pause and a breather. Let's start with the S&P 500. Right now, the S&P 500 is basically in a holding pattern. It could be consolidation where you're seeing a lot of sectors within sort of consolidate. There's a pause, but there's also a connectivity to the 10-year Treasury. If you're following along on our daily updates, Tuesdays and Thursdays, if you will, earlier this week, I made reference several times to this 10-year Treasury. We're actually going to talk about it again today. And that's exactly what's happening with markets, is that the 10-year Treasury this week jumped. It spiked. We're actually here at the 132 level, basically mid-February as we film this. And if we go back a year to February 20th, sort of 1 year on the coronavirus announcement and global pandemic and shutdown that we all experienced and when it was actually discovered. This was the 10-year Treasury. See how it went from above the 137, 140 level straight down to, basis points, if you will. The 10-year Treasury was close to almost zero, as soon as we had the announcement of the coronavirus and the global pandemic was discovered. So you could see the volatility that we experienced in the fixed income market and the 10-year Treasury as it relates to the 10-year Treasury yield. Now, before that, here's what's interesting right now, and we want to pay attention to this right here. Back in August of 2019, historically speaking, we're looking at the 10-year Treasury yield. We had a 137 and 136 respectively, sort of resistance at the time. They were performing a double bottom on the 10-year Treasury. So essentially, when you're looking at patterns and you're following from a trading perspective, this right now, forget about what happened in the coronavirus and when the 10-year actually dropped. But right here, we were having a setup where the economy was starting to take off, if you recall, going back to August of 2019. A lot of the policies were taking hold and unemployment was getting down to historic low levels. And so we have a double bottom in the 10-year Treasury, which means the economy was going to take off. So the trajectory of the 10-year Treasury was on this mode right here. The double bottom in a test right now was huge back then. Right now, that double bottom, follow the purple line, serves on the inverse as a ceiling for the 10-year Treasury. Why that matters, why am I talking about this? At home, why would we even care about the fixed income market? Because the 10-year Treasury is affecting the S&P 500 right now. If this rises more, markets have to adjust, okay? So it's basically a balancing and a counterbalancing measure where the cost of sort of borrowing gets more and more and more, so all the corporations and all of the earnings have to be adjusted. So that's why when we saw a big spike in February right now on the 10-year Treasury, we're going to watch this resistance line, right? Because back here, we now have a double bottom that will be a resistance for the 10-year Treasury. This is going to be really critical to see how this plays out. We think and we believe, could be wrong, that we're going to have a test at some point in time of this trend line. When we do, we could see a sell-off and we could see a channel created right here of where the 10-year Treasury ultimately land. In the meantime, it could be 6 months, could be 12 months, could be 20 years. Japan was actually in a 20-year low. So we don't know where we're going to go, but we know in the short term what's going to happen. That's why you have the S&P and all the stocks basically taking a breather, because you have to recalculate earnings, recalibrate it, if you will. And that's actually what's happening right now with the market. Tomorrow we have options expiration. So we're going to have more volatility than normal. Remember on Tuesday I said we're going to have volatility this week. That's how we know. So we could see the next couple of trading days, even to Monday or Tuesday, S&P turn out to be negative. But those are all buying opportunities for us and Blanke Schein Wealth Management for our clients. We're actually doing very proactive in our portfolios right now. So you might see some changes that we're making on your behalf in the meantime, because this setup is an opportunity going forward, and we take advantage of opportunities at Blanke Schein Wealth Management for our clients. Now let's get to the Top Gun. Why I put Top Gun, in the mix here is because this is going to be the story in the summertime, right? So as we have the global reinflation, and so you want to look at the global yields and all the 10-year treasuries, essentially all you're seeing is right now, this is everyone else's 10-year treasury, and that's what happened with the coronavirus right here. And now we're all trending up. So they're all on the same trend trajectory. And we're talking Australia, Canada, Germany, Japan, Switzerland, UK, as well as the US. So everyone's going on this pattern, which means that globally we're reinflating. Okay, causing inflation, yes, I've already addressed this in my past talks, and that's what the central governments are all aimed to do. They're reinflating on a global perspective. This is a healthy thing because that means that we need the growth to get out of where we are to reopening. The vaccines are helping and the economies are reopening. Why? Because we need everything to grow to pay back all of this debt that we're creating. That'll be another topic on another day, and we'll talk about that. But ultimately, why I put Top Gun in here is because it's a 6-month marker. Actually, probably less than that right now. But midsummer, we're going to find out, are the new variants that all the headlines on your daily news talking about going to shut us down again in perpetuity, right? Markets are not suggesting this. The 10-year treasury in every respective country doesn't continue, right? They see problems that are ahead. And in fact, the 10-year treasury went down well before the stock market went down, even back in February of last year. Remember, March 23rd was the worst day of 2020 for the market. But a month earlier in February, the 10-year treasury dipped. So we want to pay attention to the 10-year treasury because it tells us a lot about the equity markets. Again, forward predicting of what's happening right now, all of the countries right now are predicting growth and reinflation. That's good because in 6 months from now, we'll find out if these were correct reads. And hopefully by then we have vaccines, and more importantly, we have movie theaters open and it's safe to go because all of us here would love to go see a movie in a movie theater, and it's going to be hopefully Top Gun in this July. We'll see, Tom Cruise back in the movie theater, and that's sort of like a proxy to our lives getting back to normal again, hopefully sometime soon. So everyone stay healthy, stay safe. I appreciate your time today. Thanks for watching. But that's a little history lesson and a little fun and a little hope for the future as to we see, 6 months down the road, hopefully markets are actually sort of predicting that we're going to see the world reopen again and life getting a little bit back to normal. So in the meantime, don't fight it, go with the trend and take advantage of all those opportunities that come our way. Thanks for watching. Take care.